Well, thank you for watching this video. In this video, I'm going to talk about the balance sheet, also known as statement of financial position. So this is a accounting video. I'm going to go to I use QuickBooks to explain the balance sheet. So I'm going to go to the QuickBooks Online and show you how components of balance sheet works. And be sure to subscribe to our YouTube channel, and leave a comment if you have any questions. We have two channels. Okay, so I'm on QuickBooks, and for this video, is basically I'm just going to go over the balance sheet. So I'm just going to go to the balance sheet. Okay, so the balance sheet, it looks something like this. We'll just go through uh, all these components. Okay, so it's basically, you have assets and you have uh, liabilities, and then you have the equity. So it's basically the assets minus your liabilities are equal to your equity line. So assets minus liabilities, it's your equity. And assets on one side, the other side of the balance sheet, you'll see liabilities and equity, and this should match, always match. See, you got the 1370 on liabilities and equity, and on the asset side, you should see the same amount. So that's why it's called balance sheet. Okay, so I'm gonna go over a few things on the asset side first. So on the asset side, you have the current assets, and the current assets is like you have a bank account, like a liquid asset, also not a liquid asset. You can sell it right away. Sometimes if it's a savings account or treasury, or even it may take a while, but in a couple of days, you should be able to get your cash. And then your accounts receivable. So it's basically you're invoicing your customer and so they owe you money. And other current assets you have like inventory type, and then some prepaid expenses, uh, and uh, and basically those are the current type, so the current type is basically it's not AR, it's not bank account, but it's the inventory. You can sell it, uh, you may not get 88,000 right away, but you can sell it and get some money. And so that's the current assets. So the current assets includes your bank accounts, accounts receivable, and your other current assets. That's your other current assets total. The current assets total. Okay, then you have fixed assets. It's fixed asset is like when you buy some equipment, automobile, that kind of stuff, and you basically depreciate over time. It on it's the computers, and then you have the other assets. It's like intangible assets. Those are like franchise fee or goodwill type. There's no asset involved, but there's a value for that purchase. So that's why it's sitting under as intangible assets. So if you combine all those, you get your total assets. On the liability side, then you have the current liabilities, like accounts payable, which is the other side of accounts receivable. You purchase from vendors and they give you some terms and you set up as accounts payable. And then you have credit cards. You basically everyone's familiar with the credit card. You use it and you pay it over a certain time. And then you have other current liabilities, like if you bill your customer and you charge sales tax, you'll show up as your sales tax liability, uh, And then if you have subcontractors payable thing, it will show up. That's also part of the current liabilities. And then you have the long-term liabilities. So the long-term liabilities is basically, you got a loan from your bank, and they said, well, you can pay it within 60 months. That's your long-term liability. So anything over 12 months goes to your long-term liabilities. 12 months, and so if you're under 12 months, it's your current liabilities. Under 12 months, current liabilities. Although the credit card, if you just make the minimum payment, that will go on forever. And the long-term liability and notes payable. If you bought certain things on lease, on loan for your car, let's say you can pay it in 60 months. It goes as a long-term liability, and you could buy, let's say you got SBA loan, it goes to long-term liabilities. So that's the total liabilities. So it includes long-term, you can call it short-term, it's current liabilities. Okay, and then come down to your equity side. Your equity side is the money you put in for your business and the money you make from your business. So that's your equity. So whenever you have net equity, that means you're making money. You know, net income. If it's positive, you're making money. If it's negative, you're losing money. And on the balance sheet, the way it works is every fiscal year they move this to the retained earnings. It move. Like say for January 1 or December 31st, they will move from the net income, uh, loss or income. They move to retained earnings, and the income statement is always for the fiscal year. So that's the focus of this video. Hope it's helpful to you. And if you have questions, just let me know. Thank you. Bye.